guys, this is Mommy Beluga Investing.
Hi all, welcome again to my channel, Mommy Beluga Investing, a YouTube channel for a mother learning to invest for family future. You can also access this channel in podcast version through AnchorFM, Spotify, Google Podcasts, Apple Podcasts, and other podcast platforms. The channel is Mommy Beluga Investing. Alright, for today's video, I'm going to give an update of my family's investing journey and strategy as of January 2022. Hopefully, I can make a series of this kind of video to track our family's finance and investing strategies over the time. I believe it will help me to see how our finance and changes over time and to record the strategy that works and that doesn't work. Before I start this share, as usual, let me read the disclaimer. Okay, disclaimer, this is an amateur video. My main intention is to record my own journey learning and investing and managing my family finance as well. This video shouldn't replace any financial advice. Every family is different. What I share here may fit to my family but may not fit to yours. Please conduct your own research before making any financial decision. Okay, now let's start. This is my family's current strategy for supposedly wealth building. We have maintained the same strategy for at least the last 3 years. At this point, we do not know how it will impact our family's finance in the long run, but I'll just start with sharing our family cash flow, yeah, we'll see. Okay, I'll start with salary. Yeah, we both are working, so our main income, as for now at least, from our salaries. Every month at the beginning of the month, we set aside around 20% of our salary for our emergency fund. How much do we need to save for emergency fund? For us, we save 12 times of our monthly expenses. So it means that we save in the amount of our annual expense. Yeah, then we use the rest for living expense, emergency fund, 12 months, and living expenses. We live a very simple life, at least for our own standards. So even after setting aside 20% at the beginning of the month, we still have around 10 to 20% at the end of the month in our usual regularly, usually. Meaning that in total, we usually save around 30 to 40% of our salary every month. So that amount is to be kept in our emergency fund. This amount of saving is the regular ones, but sometimes we may not be able to save that much for emergency, not much, or even take some money out of the emergency fund for emergency use. And that's okay because that's what emergency fund is for, right? For emergency. And then, of course, 20% of our salary goes to, we are in Singapore, so you can guess, CPF, even before they reach our bank account. Yeah. I still have a lot to catch up since I started my employment pretty late. Yeah. Okay, CPF update as of December 2021. Yeah, my husband has reached his full retirement sum in 2021. Yeah, through a combination of a no employment gap for 16 years, ordinary account to special account transfer, and annual top up. Currently, we are paying our house in cash as well, not through our CPF. For me, yeah, fingers crossed, if I can maintain my current job or salary or income, at least the income, plus around 7,000 top up this year, and combined with the SA interest, I will be able to reach my basic retirement sum this year. Okay, we are 40 and 30 years old this year. We hope that by having our CPF reaching full and basic retirement sum this year, we are on our way to financially stable retirement. Okay, now let's continue with our cash flow. In our last video for the September update, we mentioned, our last video, September update, we mentioned that we save for our child's education fund after we stock up 12 monthly emergency fund. Yeah, back in 2019, we put some amount in SSB or Singapore Saving Bond, which according to our calculation will be enough for our child's college expenses. If it's not enough, then it's like it can support us quite a bit for the college expenses. Yeah, back then the annual interest rate for SSB was around 2%. Okay, we want to stay healthy for a long time and support our child's education later, but touch wood. Yeah, we do not know the future. Our child will be 16 years old by the time the SSB can be redeemed or matured in 2029. Additionally, most of the interest from SSB are put into our child's CPF. Yeah, not emergency fund. Our child's CPF. At this rate, I highly doubt that the number will get our child to be CPF millionaire, but at least we set aside for her. Okay, now moving on, we already have 12 months emergency fund and child's college fund, and we still save around 30 to 40% of our salary. So what do we do with this? We save it for investment. What are our investments? Yep. Okay, here are our investments as of January 2022. No significant updates from our investment number in September. Yeah, bank deposit, government bond, money market fund, stock. Yep, be it individual company stock, ETF and rate, peer-to-peer lending, just a bit, and a tiny bit of cryptocurrency. The only update is on my husband's side. He adds more into his US stock from his Singapore's dividend, while putting less in cryptocurrency and peer-to-peer lending as compared to September 2021. We maintain that any dividend or interest from our investment are reinvested into the more risk area. For example, I buy more stock with my dividend. We try as much as possible to not use any of the income from our investment for our consumption or living expenses, because we still have our own, emergency fund. Yeah, so we, as much as possible, we take money if we need to from our emergency fund instead of our investment yield. Okay, so now the question is, how are we doing with our investment? Okay, I would like to say and share that our goal is to finance our life fully from our investment. Yeah, so let's see how we're doing with that goal. Okay, we started tracking our passive income yield from 2014, and this is what we have for now. In the year of 2019 and 2020, we managed to earn passive income equal to 19.8 and 22% of our annual expense. Not that bad, yeah. The percentage is reduced from our September 2021 review since we recalculated our annual expense, which in turn slightly higher than the number we used in our September 2021 review. In January 2022, we calculate our actual passive income for 2021. The number stands at equal to 17.3% of our annual expense. Yeah, it was lower, yeah. There was a slight increase from 2019 to 2020, but there was a considerable decrease from 2020 to 2021. Though if we look at our investment, the total amount of investment actually grew 67.3% from 2020 to 2021. To put the number into perspective, our portfolio only grew 6.2% from 2019 to 2020. As mentioned in the previous slides, we still actively pumped into our investment from our salary. We crunched the number and found the culprit. In the year of 2019 and 2020, we managed to gain 6.62 and 6.94, almost 7%. Yeah, respectively, out of our various investments, not only the stock but various investments. While in 2021 we only managed to gain 3.26%. So even when our total number of investment increased, the gain is around half of 2020. So how are we doing in the long run? Okay, let's see some projection. Okay, with the assumption of we continuously invest at our current rate, we have constant annual expense, and our investment yield is reinvested. All of our investment yield reinvested. Then constant yield of 3.26% as of similar to what we had in 2021. Our investment yield will be equal to our annual income by 2037, which is 15 more years from now. Not that bad, yeah. So, yeah, my husband and I will be in our mid-50s by then. Yep, 2037. Okay, what if the annual yield for our investment is 6%? Yeah, just like what we had in 2019 and 2020. With the same assumptions, yeah, our investment yield will be equal to our annual income in 2028, which is 6 more years from now. I'm quite happy with this number, yeah, really not bad. This is why I want to optimize our investment. I would like to have good yield while managing the risk as well. Hopefully I can do this by selecting good stocks with stable value and healthy amount of dividend yield. By making today's video and its projection, as we can see on the screen, this is a projection, yeah, 2022 and above is a projection. I know the numbers. I keep all of this calculation in a spreadsheet and monitor our finance and investment as a comparison. Okay, just for fun, yeah. Many proponents of FIRE movement put 8% as annual interest rate or investment yield with the same assumption below, yeah. By 2025, which is 3 more years from now, our investment yield will be equal to our annual income. This sounds like a very good idea, but where can you get safe investments with 8% yield per annum nowadays? Okay, if you know, you can put answer in the comment section below. Yeah. Okay, so that was my family investing journey and strategy as of January 2022. Follow my channel for individual stock analysis and occasional updates on our finance and investing journey. I have been helped immensely by other families who put their finance and investing journey out there on YouTube, podcast, and blog. So this is my way, this video is my way to pay forward for the community, FIRE community, or just FIRE community without the RE. Yeah? If you have ideas to optimize family investment, you can share with us. Yeah, put your idea in the comment section below. Sharing is caring. Yeah, please subscribe. It means a lot for a beginning YouTuber like me. You can also access this channel in podcast version through AnchorFM, Spotify, Google Podcasts, Apple Podcasts, and other podcast platforms. The channel is Mami Beluga Investing. Okay, that's all for today. Hope we all have a good investing and financial year in 2022. See you soon. Bye-bye.